Hello, everyone, and welcome back to another episode of the Market Outlook series. I'm Kavita Agrawal, the founder of EXP INVEST, and today we are here to talk about Nifty, Bank Nifty, and Intersector Analysis. The idea of doing this weekly analysis is we analyze the important levels of both the major indices and we see which is the sector which is taking a lead. This is a 3-minute time frame of Nifty and progress towards the 1575 daily and weekly time frame. This helps us get a very holistic image of what is unfolding in the market. This 3-minute time frame, if you look at the activity since 24th of November, that is the some bullishness had started seeping into the 3-minute time frame, in the sense still the RSI on the 3-minute time frame was taking strong support at the level of 30. It wasn't breaching the level of 30. And soon enough, this week on Tuesday onwards, we saw first strong breakout above the level of 60 on the 3-minute time frame. This is exactly where the major breakout which unleashed this monster of a rally began. Now, what the 15-minute time frame is telling us that the market momentum is super duper strong. Why? Because the RSI is not just above the level of 60, it is also above the level of 70, and it is able to sustain itself. There is a small negative divergence, but I personally wouldn't give a lot of attention to this negative divergence, and I wouldn't assign any negativity to it. Immediately, the support as per the 15-minute time frame is this yellow line, which is the 50 EMA of the day of the 15-minute time frame, which means 20,200 is now our support. It is expected to go further up, and 20,200 will now expectedly become our near-term support on Nifty. 75-minute time frame clearly shows us that the volume activity or the volume participation in the index components is very strong, which is another reason to believe that the rally is pretty healthy and expected to continue. So my friends, if you're still sitting on cash, I think the time to wait is way in the past. You need to become brave and you need to start deploying cash in good stocks with the help of your financial advisor if you're not an analyst yourself. So, strong volumes, momentum indicators. Moving on to the daily time frame. This correction that had happened, which ended on the 26th, 27th of October, that ended with RSI touching exactly the level of 30 on the daily time frame, and since then it has been consistently going up. So what the daily time frame is saying ki boss, the downside that you saw was not a bear market. In fact, I am still very bullish, and this is just the beginning. If you will notice here, the RSI on the daily time frame has just gone above the level of 60. Now, in the previous times, let's study for a moment what happened when the RSI had just crossed above the level of 60. Let's stretch the chart to give it a little bit more depth, and we can see here we saw another 800 points rally. This point onwards, we saw around another again 800 point rally. Here again, we saw another 900 point rally. So what this basically tells us, and you can do this analysis again for further in the past. If you look at this point right here, after the RSI sustained above the level of 60 on the daily time frame, this part gave us another 100 point rally. What I think is that just because the momentum has braved above the level of 60 on the daily time frame, this is a strong bullish continuation. And I think the wave that has unfolded so far, this particular wave which has unfolded so far of around 1400 points, I strongly believe. So from this point onwards, let's take a fresh measurement from this low up to this point when it touched the level of 60. So this is a 1000 point rally. I expect another 1000 point rally from here itself minimum. So that gives me a conservative, to be on the conservative side. So initially my target was 20,600 on the index, but now my revised target is 21,300 on the index. And this is not the first time that I'm talking about this level. I have spoken about this level in my Telegram channel. So if you're wondering about my Telegram channel, you simply need to look up Trade with Kavita. So how you can join is go in the search bar and search Trade with Kavita, hit enter and join the channel. I am also going to drop this link in chat for you so that you find it convenient to join me. So if you are not swing trading already, or if you're not invested in the market, or even if you're new to the market, you have all the reasons to get in touch with a SEBI registered research analyst and get started on your journey. You can see this Gap Up. So Gap Up is a new initiative by Economic Times and Riggy, and where they are helping retail traders get in touch with SEBI registered research analysts and take pointed advice from them. Now, let's move on to Bank Nifty. 3-minute time frame, I can see is that my resistance level of 44,800 has been breached very beautifully this week. Until this point, I would say we were still in a little bit of hesitance in the market because this thick trend line that you're seeing here. So 43,800 was my initial resistance on Bank Nifty, and we can see that from there a strong rally has ensued ever since this resistance got breached, and even the signals on the RSI became really positive there. From the 15-minute time frame, again very strong rally unfolding here. But if you talk about specific banking stocks, my analysis there suggests that banks may not be the best option to go long on right now. I feel capital goods, industrial companies, FMCGs, they are better options to invest in. FMCGs also not so much, but industrial goods, realty stocks, they are much better alternatives to invest in right now. Since the first resistance of 43,800 got breached, the second target of 44,800 has also recently been breached here. And now the next trendline resistance also has been achieved. That being said, the chart of Bank Nifty continues to look pretty positive to me. And the volume pickup has obviously been absolutely phenomenal up to this point. Coming to the daily time frame, let's stretch this for a little perspective. One thing that is standing out is that the Bank Nifty, so on Nifty, we noticed that the RSI has already gone above the level of 30 on the daily time frame, but in the banking, not yet. The volume on the Bank Nifty compared to the Nifty is not as strong as I would like it to be. So considering that this is no longer a new trend, it's been unfolding for a while, I personally would have liked to see a little bit more volume here. Now, if you're wondering what kind of a weird representation of volume is this, let me tell you what this is. This is basically a histogram representation of volume using the MACD indicator. So instead of price, I have taken volume as the base, and this helps me compare 20 days average volume with 100 days average volume. So whenever it is green, it means the 20-day average volume is above the 100-day average volume, and if it's rising and above, it's dark green. If it's falling and above, it's light green. Same vice versa for the red one. You might have to hear that explanation a few times before you actually grasp what I just said. Let's move on to Intersector Chart Analysis. And this particular segment actually gets a lot of interest from the viewers because of how practical it is and how helpful it is in determining your next plan of action. So let's take a look at the prices since the closing of Friday. What we can see is that the PSE sector has really outperformed the market. Since the opening on the day of Friday, it has been up 6%, which is phenomenal. And CNX commodity has been close behind with a 3.68% rally since Friday opening. CNX Energy 3.35, one of the top 3 sector performers. Last week only I spoke that the energy sector is looking very positive, and here it is in the top 3 sectors of this week. Again, metal sector is looking very attractive. Infra sector continues to look attractive. CNX Finance, I think some very interesting opportunities have started to pop up there. Bank Nifty Realty. See, I think banking sector has really rallied a lot. Realty sector, again, I think the ongoing momentum is pretty strong, but it may not be the best sector to create fresh positions in. So if you have existing holdings in realty, it will do great for your portfolio to make sure you have trailing stop losses set on your positions. Consumption sector, I am very bullish on. Service sector is looking good. PSU is looking good. Auto sector continues to look positive. Consumer durable sector, I'm very positive on. FMCG sector continues to look good. Healthcare and pharma may be preparing themselves for a bit of profit booking. So you might want to make sure that you have stop losses set there. At least that's what I am doing. And then IT sector is a bit of a mixed bag. There are some stocks which are giving very positive signals. There are some stocks which are looking like, we're still on vacation. And there are some stocks which are like, oh, don't even come close to me. I'm going to burn you. So IT is a bit of a mixed bag, but I think it's ready to come around. So I'll repeat what I say every week, that if you want to invest for the long term in the IT sector, it is still very attractive. For the short term, you have to be very strategic. So, with that, I have concluded everything that I wanted to discuss with you. Thank you so much for joining this live session. I will see you again in the next session on Monday at 5 p.m., where I will bring to you the Retail Traders Special Series. Thank you so much for joining me today. Namaste.